Hey everyone, what's up? Welcome to another episode with me, Shashank Guruppa. And in today's episode, I'm going to address a very specific concern that a lot of people have been asking me this question that Shashank, once the war is over, what is going to happen? Are we going to go back into a beautiful position? Are we going to enter a bull rally? And who is actually winning in this war? Is India actually winning? Is India going to do better after this war? That is what we're going to answer today. And also, I'm going to tell you that even if India does better or does not do better, there are some factors that will continue and there are some factors that will do really well. And that is what I'm going to talk in today's episode. So, without wasting any more time, let's get into a little bit of deep dive learning. Okay. Now, first things first, let's look at who are the most affected of this Asia macro impact, right? So, obviously, we all know this, so I won't go too deep into it. We know that the Strait of Hormuz has been a very big trigger for this entire market. The people who are net importers have been the people who have got the most vulnerability here. And if you look at Asia, almost every Asian country except Australia, Indonesia, and Malaysia, they are fine. Everyone else is suffering right now because weirdly, even I didn't know this stat, but when I was reading, I came to know that the Malaysian government has excess supply. And obviously, the biggest problem for all emerging markets today is the stagflation risk. Because, what if things don't go well? What if things have a problem? And if stagflation comes in, then the government has to increase the interest rates. If increase interest rate happen, loans become expensive. If loan become expensive, then maybe the real estate market will not start doing well. If the real estate market doesn't do well and your loans become expensive, then funding in the ecosystem will reduce, GDP consumption will reduce, and that creates a very big problem. And that is why you see that the Nifty is taking a big crack all the time. And if you quickly, I'll show you, if you want to see Nifty as well, today, if you look at the indications, don't get confused by these stuff. Let me show you. So if you look at Nifty, even today, after in the morning, it actually went up quite a bit, but today then came back down. Even now, it's not showing any signs of bullishness. As I said, it has to cross 24,000 in my previous video. That the minute it crosses 24,000, only then I can confirm and say we are in a reversal. Right? As of now, we are still in a negative trend, and every bounce that you see, don't get overexcited. Oh, it went up 1%, 1.5%. It will most likely be a dead cat bounce because as long as the underlying factors are creating a problem, it is going to continue. I know a lot of you guys are also asking how do we do this analysis. So today I just want to thank the sponsor of our today's video, and that is Lemonn. So Lemonn basically have recently launched something called AI trading, and let me talk a little bit about that. Now, if you're a trader in such markets, obviously it's very difficult to measure your entries and exit. And to solve this problem, Lemonn has recently launched something called Bolt Trades. Now, I'll just explain to you in very simple terms how this works. Basically, you select a strategy from a different pool of strategies created by pro traders. AI monitors market movements, and when the setup is ready, you get a complete trade plan. And you can see the win rate, today's returns, performance before you even start trading, and you know exactly what you're getting into. So it basically shows you all the active trades across different strategies. Now, again, you can combine this with your Lemonn Infinity plan, and it gets better because serious traders spend 5,000 rupees to 8,000 rupees every month on brokerage. Even I spend a lot on brokerage, but there you can get unlimited orders at zero brokerage for 199 rupees a month, and that becomes a steal. So if you want to know more about this, the link is in the description. You can go check out the Lemonn app. Okay. Now, coming back to the video, now look at the problem that has been created. Number one, your oil and gas imports, because your oil went up a lot, that has created a problem. And because of that, straight away your transport and tourism industry has got hit. In fact, today I just saw the news that HPCL increased the cost, BPCL increased the cost, Zomato has increased the cost by 2.4. So now slowly you will see the effects trickling down to the actual ecosystem where we are now going to pay more for normal stuff. Financial conditions are becoming bad if you look at the FX. And if you look at remittance, they are also becoming not great because Middle East used to send money to India a lot in massive quantity. Right now, that has become a problem. And because of that, we will see more impacts. For example, if I go down here, you will see USD INR has now reached 93.5. Oh, wow. So while I'm shooting this video, it has gone to 93.5. It's gone to 0.7%. That means next few days are not looking good. At this rate, I think USD INR will compound faster than the market. And this will start hitting 100, right? But this is definitely not good for India. And it has just been going up constantly, right? Now, obviously, what is the cause and effect of this? If 93.5 is going on, then your FIIs who are net sellers are constantly selling every single month. Selling. Yes, DIIs are coming in. DIIs are trying to cushion the market as much as possible because if the SIP income starts reducing, then we won't have a cushion in the market. Market सबको निकाल देगा. जो बचा है उसको भी out कर देगा, right? But right now it is continuously in a net negative. And if I go to yearly, you will see that from 2021, the DIs in 2022, when the Russia-Ukraine war kicked in, that is when they have started selling a lot, right? So this is again a big problem right now. Now, yes, I outlined two problems. One, India is having problems, which is USD INR. I showed you that FIRs are also going because of that. Coming to the oil, right? Brent has again shot up to 104, which is again not good because we are net importers of crude oil, 85%. We used to take it from our friend Russia, but now we have to go back to him at a higher rate. So this is going to impact each and every part of our ecosystem, and that is what is getting impacted. So a lot of people just look at oil. I am looking at everything. Oil gets impacted means transport and tourism gets impacted, means remittances are getting impacted, financial conditions, forex is getting impacted, and these are the biggest problems that is happening. Another one that we recently came to know about India was the LNG dependency, that we were one of the largest importers of LNG from Qatar into our Dahej pipeline. Now that is creating an issue, and the whole world, not just us, but the whole world has realized that this is going to start creating problem. And the substitution effect, which is coal, has now gone into a rally, and some companies have even planning to launch a coal exchange. But coal is not good for us. And I think I saw another news today that came out that the Indian government is now saying that they will quadruple the green energy push right now, and they'll go much faster on this as well. And if you look at Japan, by the way, this is a macro one, right, that I'm showing you. Then I will also show you where we win also, where India will win. 250 days, Japan holds the strongest strategic crude reserves of 254 days, covering 8 months of 8 months of going forward. Now, finally, if you look at the net energy trade divide, as I told you, highest exposure, Thailand and Korea, they have been impacted the most. Biggest GDP impact is to them as well. And as you can see, I track the global ETFs here, and I look at each country. This is Qatar. Qatar has absolutely gone down. UAE has gone down. This is Turkey is pretty much okay. This is Thailand has gone down, as you can see here. Where did Malaysia go? Malaysia was also there. This is Denmark. There is no index right now in the world that is doing well. Every single index has actually started taking a nosedive to the bottom. Malaysia is here. Only reason why Malaysia is doing well is because Malaysia is a net importer of coal oil, but fully offset because they have so much supply of natural gas. And Malaysia is fine. Again, Australia and Indonesia are also fine. So their markets are okay. But this is how you make analysis, right? This is how you look at different things. Yes. So if you look at this, so this is where the real problem is coming. If all of this goes bad, then obviously Thailand is okay. Remittance reliance, 1.4% of GDP is going to get affected there, and all of these things are going to happen. By the way, we saw the jet fuel spiking. We saw Indigo launching the fuel charge. So all of these things are basically coming into a problem, right? And India is right here. We are taking moderate pressure. These are the companies taking very, very high pressure, right? Now, coming back to the winners of India. Now, what happens? Okay, let's say for some reason the war stops. Okay, let's say that tomorrow, finally they figure out a reason and say, you know what, guys, we are stopping the war, everything is done and dusted, let's go back to good times. Now what happens is, please understand, your LNG supply and your oil will definitely go down from here, but they will not go down enough for you to be happy, right? This will not go down to where it was before, which was in the 57 58 levels. It won't go down very fast. It will go down a bit, but this will have some long lasting effects. Also, this will make people realize very strongly that, boss, we also need to start keeping reserves. So demand will still linger because it has gone literally doubled, 55 to 104. It has gone up a lot. Coming to your gold, a lot of people are asking this question, why gold is going down? So it is very obvious that if oil goes up, then dollar goes up. If dollar goes up, gold usually goes down. And that is why gold is seeing a massive fall here. So if oil prices go back to normal, I don't think gold will start rallying again. I think gold rally will now consolidate for quite some time because it has broken some key levels over here, right? If you look at the US market, QQQ, it is literally at 200-day moving average. The guy who's doing the entire war is absolutely fine. Nasdaq as well. It broke the channel and it's now at 200-day moving average. And coming to the last one, now coming to INR USD. Even if the war stops tomorrow, this will not go back to 84, 83 levels that we were seeing at the start of the last year, right? We will maybe come back down to 89, 90, but we will still stay at higher levels. And your dearest FII friends will still leave and go away, right? So these are the problems that we are currently seeing right now. Now coming to what are the good things that we can look at. First things first, if you look at our Nifty is supremely right now coming to an undervaluation zone. Even if you look at the median P is 23. I would still say median P is slightly higher, 23. But if you look at the current P, it is 20. That means on a forward basis, we're somewhere around 19. And the last time this happened was during the Russia-Ukraine war. And a little bit towards COVID, we were at 18.7. But this is a very good deployment zone, right? So for all the people who are thinking long term, Nifty is right now in a very good deployment zone right now. So if you look at foreigners, FIIs, in fact, they should not be leaving. They should be coming inside India and investing in India because everything is ready for India. So this is a big, big positive for India, looking at it from a macroeconomic standpoint. Second thing that I would say is defense, right? Again, guys, whatever I show you today is not a stock recommendation, and I don't hold any of these stocks. As an RA, I have to be very clear about all of this because I'm SEBI registered. But if you look at the defense industry is again holding on and will continue to do well. Again, mainly because people have realized that, boss, we need to now up our defense game. We cannot be like this, right? So all the defense companies have fallen down. But we need to up our defense game. And mainly, I think the winner would be Solara can be a winner because most of the Solara, it seems, solar industries, right? Again, mainly because your explosions, your drones, these type of companies will do well. I think drone mein ek aur company hai, MTAR. Again, I don't hold any of these companies, but see, this is almost close to all-time high. Again, this is not a buy or sell recommendation. This is just to learn. So this industry will continue to do well, right? Irrespective of the war getting over or not. I think defense is very strong. It will continue to do well. Everyone else will take a small shock, will take a small pain. Coming to green energy, recently I saw that a green energy push in India is going to be doubled very soon because the government has realized that we have had a problem right now with this entire LNG thing. So I think green energy stocks will start doing well. A lot of many companies on those lines. You have your Adani Green, that is the largest green energy producer in India today, JSW, Tata, and then the ancillaries that come into power cables, structures, all of those companies will start doing well. I don't want to go into those stocks because some of them I own, so I don't want to do conflict of interest there. So green energy will do well. And again, looking at gold, as I said, gold would not go very high, should be moderate. But if you are investing for long term, I think you should still have gold in your portfolio. I don't think gold is really bad. But this is how India wins. So if you ask me right now, Shashank, would you invest in India? Answer is absolutely 100% yes, because we are at historical lows. I would definitely invest as much as possible today into the market. Obviously, don't buy risky companies. Small cap is still overvalued. That means your first level of rally will come in large caps, and we will see large caps rallying up. Even in large caps, many recent auto large cap companies have shot up, but there are so many undervalued companies right now in India in the large cap zone. So you will see the first rally coming in from large cap. Oil will still be high, so it's not going to give you immediate effect. INR will still be high. IT companies ideally should be doing well. If a reversal happens in IT companies, they will start shooting because high dollar plus reversal, two stories playing together. I think IT is the best contra pick right now. But yeah, this is what we are looking at, right? So again, I will keep updating you guys on the market. But yes, India is in a very good zone right now to win. And I think it should continue winning for the next few years as well. Awesome. Chalo, any more doubts, any more questions, you can put it in the comment section below and I will keep answering them for you. And this is me, Shashank Guruppa, signing off. Take care. See you. Bye-bye.